traders. This is Blake Morrow. You were listening to the Morning Edge webinar. It's time to get our analysis started and get my head back into the game again. So let's start with the euro dollar. Okay, where are we at? Here's the euro dollar, and obviously, this what a great level to sell the spike into at 108.50. For those of you guys that did, that's awesome. I mean, it was the perfect price. We were obviously right here, and when we drew that out and said, hey, if you get a spike into 108.50, take it. I'm sure many of you did. It's awesome. Now the question is, whoops, I didn't want to do that. Now the question is, what the hell do you do now? That's the right, and that the key is well, what do you do at this point? And like I said, hopefully, a lot of you guys did well with it. I just, I'm not too sure what the heck to do at this moment. So that's where we're going to try to find out. So obviously, between now and between now and Wednesday, the FOMC, I'm assuming that this zone is still going to play a part into what we're doing. So that means that any rally back up to 106.60, maybe to 107 and change. So I think that that's probably going to provide some sort of resistance. So if you take the spike high, following the ECB down to the lows here, the 38% retracement once again comes in at 106.60. So for today, that's probably the price. If you guys are like, okay, well, I still think the euro is going to eventually break down, I'm going to sell it there. I think that's the price that you need to be thinking about it. Okay, so 106.60, that'll be a resistance today. For those of you that are like, well, I think following the FOMC, the dollar is going to get smashed, and so I want to be long the euro going into this, which that might be your opinion as well. Obviously, you want to look for dips back into support as buying opportunities. So, where would that be? I assume that we're coming back into this zone. So and by the way, I don't think I did it perfectly. I missed that. It's like 24% retracement really stalled us there. So probably now I know we have support down at 105.25, but I just don't think we're going to be seeing that. I think that we might see 105.50 again. I'll write down them both: 1.0525, 1.0550. I think both those areas will probably offer a place for buyers, people that want to go to counter trend. Now, the euro dollar, after the rejection from last week, obviously is still bearish. We have to now get above 108.50 to really turn this into more of a neutral stance. I think just the sheer rejection of this move really signals to us that the bearish trend is still very much in play. But you want to sell it not necessarily where we're at right here, but maybe up here, or maybe even better yet, sometime into next week, maybe back at 108 or something like that. I think that's that would be doable, right? But for now, I think you need to mind the current support that we're dealing with. All right, let's go over to the cable. Here's the pound dollar. So the pound, looking at it right now, what a mess this has been. I mean, look at this strong support that is managed to be very strong support for us. Is it was very close to coming back in play, I guess, late last week. And just looking at it, Looks like a good short right now. Not saying like I'm out. You know me, I'm not really interested in trading the cable at the moment. I'm still really not in the camp of doing that. But this might actually be a good short right here. You could, probably short here with stops above the 126.50 level. You know, I don't think that's, necessarily a bad play. Um, but I think that, any move back down to 125 and a quarter is going to give us some support. Now let me see something else here. See, he came right into the 618. Just right down 126.50. 126.50 is resistance. Support. 125 and a quarter. Okay. And we're still very much in a range bound environment with the pound right now. Let's go over to the Swissy. Swishy. So Paul had a little head and shoulder pattern, and I see where he got that from. Looking at it. Man, look at us. We did spike almost down to parity, then ramped right back up again. Interesting. Interesting. Um, Well, obviously, this false breakout spike high here was pretty key. So now we have a little head and shoulder pattern. We're right into the neckline right now. For those of you that are looking for a short, you can actually short it right where we're currently at. I'd only play this thing on the long side, so that's just not what I'm going to do. Is I'm not going to buy Swiss francs at this point. But for those of you that are wanting to do that, I think it is a possible trade up here. Intraday support is right here. I mean, I guess if you wanted to really find a good level of resistance, it's going to be right here. 101.75. 1.0175. And support is 101.15. Right? And let me see. Okay, 101.15 is also the 50% retracement. So, if for those of you that are looking for, a long, probably stage a little bounce right there. That's what I would be thinking. Okay. All right. Let's go over to the yen. So, like I said, I've already started selling some yen. I got tripped into a trade at 115.94, and I sold a little bit at 55. So my cost average is literally like right around here, and I put those orders in last night, and they got tripped. Now, $115.60 is support. I know it's really close to where we're at, but you can see that's pretty key support. Now, if we break below that, may expose a move back to 114.80. Okay, which will be right here. But it doesn't, this is just kind of assuming it's going to break. Now, for those of you that are wanting to be a little safer, you wait for it to break through 115.60, maybe 115.50, but anyway, 114.80, 115.60, and resistance is, could actually take us as high as if this channel, which I think is in play right now, or at least close to. Something like this. Right? So we could still rally to 116.50. I'm going to write down 116.10, 116.50, and they are still doable to get up there. Don't think that it's not, because it is. Okay, we could get up there. And this is still bullish. This is obviously still bullish as well. Okay. Dollar CAD. What's been up with the dollar CAD? So the dollar CAD, whoa. So following, all this non-OPEC news and the meeting this weekend, we actually came down to, oh God, it's like very tempting to go long here. So really key support comes in at 131. I mean, this is trendline support, right? God, if that gives way, that is going to be extremely bearish. Think about that. 131, that is critical support. If the dollar ends up getting walloped this week, this dollar Canadian could, following the Fed meeting, if we break through 131, that's going to be a pretty bearish event. But bullish for the Canadian currency. So, with crude rallying above, if crude is breaking out and the rally above $52 is real and crude's heading back up to 60, the dollar Canadian is probably going to break through here. We got to keep an eye on the Canadian now. Very careful. Very, very careful if you're short Canadian currency, because if we break through 131, it could be downright ugly. So this is obviously on any rally. We drew that last week, and I don't think there's anything really wrong with that. Let's get rid of that for a second. 132.60 and 132.30. So I think we'd be really lucky if we even get it up. We get it up. We get up to 132.30. Oh boy. Oh boy. Oh boy. Oh boy. I'm gonna put in the range because we did drop below. Remember when we dropped below 133, obviously. So I'm gonna put us in a range, but man, I'll tell you, we get below this 131, I'm gonna turn it to bearish. Crazy, huh? It is. All right, kiwi. So you don't laugh at me. All right, the kiwi. Oh, look at that. Looky here. Looky there. Look at that shooting star over here. That was a nice little shooting star reversal. Pulled us back. It looks very choppy now. I don't even know what to do with the kiwi at this point. Um, I really don't. Looking at it, I have like no idea what to do with it. Um, well, I think at this point, you know, I think at this point, you can see where trendline support is, which means that 71.15 has to hold, but any rally up to 72.20 is probably going to be sold into. Um, doesn't look like there's anything to do with the kiwi right now. Like I couldn't really argue a point right now to be trading the kiwi. Yeah. So I mean, 72.20, 71.10. 71.10, 72.20, and yeah, I mean we're in a range at the moment. We are, right? We're in a range, and I mean, as much as I want to be bearish the kiwi, I mean we have to get through, we have to get back through 70 to really get the bearish case back on. Right now, it doesn't make a whole lot of sense to be doing anything really with the kiwi at all. Okay. Well, guys, I'll be back in a few minutes. When I come back, we'll do the Aussie, the dollar index, the peso, the Swedish krona. I got it on my peso this morning, by the way. Swedish krona, Norwegian krona. Don't go anywhere. I'll see you back here in a few minutes. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up with the Aussie and everything else. So let's go ahead and take a look at the Aussie dollar. So let's see here. Aussie, very similar to the kiwi, and every time it gets up to this, 75-cent level, it's like, okay, you get here you go, you got another chance at squeezing off a short somewhere up here around 75 cents. The problem is it's that we're not getting any follow through to the downside either. So let's delete a few of these things here. Give me a second. Okay, so here's a resistance that comes up towards 75 cents. Again, it's kind of like the kiwi. It's like, what do you do with it here? What we could probably do off the lows. Let me delete that, and not even sure why that's there, but I'll have to come back and revisit that. All right, let's grab the trend line off the lows here. So let's get rid of that. Okay, so at this point, let's remove this one too. At this point, you can see that we're really just kind of boxed in, and support comes in right here. That's trendline support, and it's also horizontal support. So that comes in at 74 1/4, and then obviously 75 cents and just above 75 cents is big resistance. And there's nothing to do right now. I mean, there isn't. I'm assuming that and this is key. I'm assuming we're going to find something to do. We're going to find something to do following the the Fed. And frankly, if the dollar gets walloped, I mean, think about this. Like, if the dollar goes down from where we're currently at, let's just say the dollar yen comes back down to 114 or whatever, euro dollar goes up to 107, 108. Look at the setups that we see in the Kiwi, the Canadian. The Canadian breaks through 131 and it's going to get slaughtered. The Aussie dollar gets above the 75 cents, it's going to rip. I think we're set up for some pretty good dollar selling should the Fed give us a dovish hike. I mean, if it's a dovish hike, I mean we're going to see higher levels in the Aussie, lower levels in the dollar Canadian. We're going to see higher levels in the Kiwi. It looks all very doable, if you ask me. Anyway, so I don't know if there's anything to do with the Aussie right now. I'm just kind of setting you guys up for, Friday, because there's no economic data here today either. I don't think. I think it was no, nothing. We have the federal budget balance, 10-year bond auction later today. I mean, there's nothing going on today. All right. So Aussie, nothing. Let's go over to where we got to go from here. The peso. Oh, no, dollar index. I'm sorry. All right. Let's take a look at the dollar index here. So the dollar index, we had this head and shoulder pattern that, it, I mean, you can argue that it played out or pretty damn close to playing out because, if the neckline was drawn a little tighter, which I didn't have it drawn tighter, but if the neckline is drawn like this, we might have actually completed it on that spike low. All right. But, it was so fast that, I thought we were going to get back down towards 99 cents before rallying. Obviously, the dollar's a mess right at current levels because we're rejecting at this big, here, let's go over to the daily. This is that huge 618, right? Here, actually, let's go over to the weekly just so you can see it. So we're rejecting right at the 618, so we know it's huge resistance for the dollar index to start, okay? And we're trying to really figure out, is the dollar going to break out from here? Are we breaking above 102? Because if we break above 102, it is really going to be gone. Or if we're just going to, back in again. And I think that, we're going to have answers to that. We're going to have answers to those questions really come, this week. Here, let's get rid of that for a second. Let's move that. We did hold the 38% retracement here. So I guess intraday, 100.60, and then you got 102, and I think you just got to respect what you see there. 100.60, 102, and it's still bullish. It's still bullish. It's just, I don't know if I'd want to be really bulled up right up against resistance at this point, so. Sorry. Okay, so anyway, 102.99. Yeah, I mean, obviously today 100.60. Let's see here. Get rid of that for a second. I'm just trying to think, like, on this pullback, this is going to be a 38% retracement. This one right here, let me show you. Really, that's if you want to be long the dollar, that's a 50% retracement. I take that back. So it's a 50% retracement on a pullback here. So if you want to be long the dollar, you got to do it down here. I don't think that you want to do it here. You want to try to get long back at this 50 back. That's what I would think. Okay. All right. Anyway, all right. Let's go over to the peso. So the peso, we see this support here. Let me get rid of this stuff from last week. Delete, delete. Okay. See, I got out of my US dollar Mexican peso literally right here, like 124 and change. And I had been short since last week, I've been short since, in the 40s over here. So I finally got out of it, but and then with the news out of the non-OPEC and crude oil rallying, it was I wanted to sell it in the strength today, which I did. But obviously, if we break through this low here, which is 2022, that exposes a move down to this 2010, which that's where the line in the sand is. If you ask me, is the bull bear line in the sand. While we're above 2010, it's bullish, but we get below 2010, and it's going to start getting a little slick. I actually think we're going to eventually break below here. I just don't know if we're I just don't know if we're going to bounce first back to 2050 before rolling back over again. So what I'm going to do here is I'm going to write down 2013, 2022, right? And then up here is 2050, and it's still bullish. I mean, it really is, but I still would like to sell in the strength personally. So if we gets up here to 2050, I'd be a seller again. Okay, and if it starts breaking through here, then I got to rethink what I'm trying to do, because if we break through this 38% retracement, then I think it's gonna just start rolling over. Just trying to get a good sale somewhere is going to be key. Okay. All right. So let's go over to the Nordic currencies. Obviously, the Norwegian krona is very strong today because of this news. Now, this news, the non-OPEC news. But what's really interesting, since I haven't looked at the Norwegian krona, it feels like forever. It's really interesting here. Whoops. That, in my opinion, if we get below this price right here, it's going to turn this thing lower. Okay? If we get below that price, it's going to turn things lower. That comes in at 840. Spike high, resistance, 50% retracement, 842. So yeah, we have to get below 840. Well, it's actually 842, right? Roughly. 842 is key support. If that breaks, then the Norwegian krona is probably a nice long. And even if you don't want to trade the dollar, you can say, well, I'll just go short the euro Norwegian krona. I go short the Swedish krona, Norwegian krona, whatever, but a break below here is really going to tell us that the Norwegian krona is ready to go. Okay. Now, if we do get a rally, I think the rally is going to be very limited because of this, crude breaking out. So any rally back up to 840, let's just call it 848, might be a nice area to be on the short side. 848. Okay. Surprisingly, it's still bullish. Well, you know what? I think I'm going to flip this thing into the range. Okay. All right. Let's go over to the Swedish krona. Here's the Swedish krona. Well, look at this. Looky here. Now that flag pretty much worked out. You know, for all intents and purposes, we pretty much did that. Okay. Resistance at the 618. We went a little bit above it. What is this here? Get rid of that. Does it look like we're topping? I think if you get a move to 823, I think that's an opportunity to sell it. You know what I mean? I think it's I said 923. I'm sorry, 923. I think that it looks like it's trying to top here, and so like any push above these highs would just be just a little squeeze play before we're coming right back down again. So I think you play it like that on the Swedish krona. Now, check that up. Come on, work with me, people. Fine. Be that way. Okay. Yeah, I don't know where support is here. This is a hard one to gauge. I'm gonna write down support as being this trend line support. I just think it's very minor. So any dip down to 915 is probably going to have some sort of support. But like I said, if I were trading it, which I'm not right now, but if I were, I'd be looking to sell into strength. Okay, and it's still very bullish. I mean, I think we can pretty much say without a shadow of a doubt that it's bullish while it's above 9. It gets below 9 and gets below, especially below this 890, then we got some problems. But it's still very bullish. I mean, we're still in a very, very bullish trend. I just think it's trying to peak here. All right. Okay. That is your bias chart. It is finished. Let me see if I can take some questions from you guys. Let's see here.